Hello, everybody. Thank you for joining us. This is the Traders Exclusive Live Trader Showcase for September. I'm Sherry. If you need me for anything, please email me at support@tradersexclusive.com. And we're so happy you could be here with us. Please check out tradersexclusive.com, where we regularly post articles and video clips with valuable trading tips and strategies. That's also where you're going to find a recording of today's webinar. And of course, we always get started with our disclaimer, where you should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. This is teaching and training. Please check it out for yourself. Do your due diligence. Past performance is not necessarily indicative of future result. Moomoo is our sponsor for September. With Moomoo, you get free access to real-time LV2 market data of US stocks. And for a limited time, join 19 million Moomoo users and get up to 16 free stocks, including Tesla or Google, when you register for a new account with this link. And you fund it with at least $100. So the way it works out is for the month of September, deposit $100, you get 5 free stocks. If you deposit $1,000, you get the 5 free stocks plus 10 free stocks. And if you want to have a $5,000 account, you get the first 2 tiers plus 1 free share of Tesla or Google. All right, folks, this is Jim Woods of StockInvestor.com. And he's going to be talking to us about uncovering the 5 key traits of every massive winning stock. And I was very short on bullets, so you guys are going to be finding out everything during his talk. And let me just run over here to my bio that I have for Mr. Woods. And Jim is a 30-plus year veteran of the markets with varied experience as a broker, hedge fund trader, financial writer, author, and newsletter editor. And he is also a former U.S. Army paratrooper. He's a self-described radical for capitalism. He celebrates the virtue of making money from his Southern California horse ranch. You're already deeply ingrained in my heart because I'm also a horse person.
Nice.
He's the editor and investment director of Intelligence Report, Successful Investing, Bullseye Stock Trader, High Velocity Options, and much more. TipRanks has rated Jim the #1 financial blogger in the world out of more than 6,000 competing analysts, and he's been ranked inside the top 12 globally for more than a decade. He's known in professional and personal circles as the Renaissance Man because his expertise includes such varied fields as composing and performing music, Western horsemanship, combat marksmanship, martial arts, auto racing, and bodybuilding. Woo! All right, welcome, Jim. This is Jim's first time with Traders Exclusive. I hope we get to see you again in the future, and I'm going to change you over to being the presenter. Now what's going to happen is if I make you the organizer so you can see the questions, it's going to knock your mic out for about 5 seconds.
Okay.
So stand by.
All right.
Oh, came right. Nope, there it is. It's going, and it's back. There you go.
Okay. Right,
Thanks
great.
for joining us.
Well,
Yes,
thank you very much. That was quite a nice introduction. I appreciate that so much. Thank you.
Well, I had to cut out about, an hour's worth of stuff.
Well,
So that's awesome.
it's they say that if your hobbies get in front of your work, well, that's acceptable. But when your hobbies start getting involved with your other hobbies, then you might have a problem. So I try to keep it, we try to keep it special.
I think it sounds like a pretty balanced life right there. And
yeah.
Just for my own curiosity, do you raise horses?
I have horses. I own horses. I do Western horsemanship.
And I was wondering, do you specialize in Mustangs, quarter horses?
Yeah, I have 2 quarter horses, 2 American quarter horses.
Nice.
They're the best for all around rodeo type Western horsemanship. So I'm getting. I don't compete any. I used to do a little bit, but years ago. But now they're just more like I go out back, saddle them up, and go out for a ride. So it's more of a Zen thing than anything at this point.
But not yet just yard ornaments, right?
No, they're not yard ornaments.
I'm really partial to the Rocky Mountain horses.
Yes.
I've just and I actually own a business called Circle X Bitless Bridles,
Nice.
and so we get rid of the metal out of the mouth. But
Yeah,
so I get to
I'm
see all the different breeds.
that's interesting. Yeah, I'm a very pro natural horsemanship person. I do barefoot trimming and I try to I never I have ridden with bits before, but I tried to go bitless as well. I actually
So the
try to do it. I
Bozals.
try to ride at Liberty sometimes, which is
There you go.
better, that's the best. That's the ultimate, but some horses a little tough to do, but
True, if they're really
my
hot.
one of mine can do that. So
Well, I
and when I
appreciate you
say at
being.
Liberty, you know exactly what I'm talking about. So
Yes, I do. Guys, when you work a horse at Liberty, he has nothing on his head. You're not making him do anything. He's doing exactly what he wants to do. And that's like the epitome of horsemanship, for your
yeah,
horse to choose to be with you and do things with you instead of grazing in the field with his friends.
right, exactly. Yeah, it's quite
So,
beautiful experience when you connect with them.
oh yeah. Have you seen how much they're being used in therapy now? And they're
Yes.
even using the minis for therapy animals because they live so much longer than a dog.
Hmm. Yeah, mini horses. There's a couple of ranches near where I live that have mini horses, and they're great. I'm considering one myself, so I love it. So cute.
All right.
Well,
Well,
if
I'll
we
let you
get our
get on with
financial
what you're
house in
here
order,
for today.
if we get our financial houses in order, you can afford things like mini horses and things like that
There
you
you
want to do.
go.
So that's where it
All right. Now
connects.
I just want to let you know that I think that we can see your camera completely.
Okay, great.
So I'm not sure if you're sharing your screen yet.
I haven't shared my screen. I will right now.
Okay.
I saw the button to click.
All right. I'm going to mute myself and you take it away. Now we're seeing your
You just seen the
buffalo.
okay. Oh, you
Yep.
just seen the buffalo. Okay.
Yeah. So you'll
Uh,
want to put yourself you want to do your slideshow
yeah.
so that we don't see all your slides.
Okay. So um,
How many monitors are you working with?
I just have one monitor. So
Okay. So what you'll
uh,
want to do, yeah, slideshow from the beginning.
okay. So you can see that then.
Yes.
Okay. Can you see
There.
that now?
Now we can see Bullseye Stock Trader. Jim
Great.
Woods, Bullseye. Good deal. All right. I'm going to
Okay.
mute myself and I come back in. If you need me to do anything, just holler. I'm listening with an ear.
Okay. Great. Thank you.
All
Thank
right.
you so much. And again, appreciate that very kind introduction. I'm Jim Woods. As I know, I'm new to your to the group's audience, and I'm looking forward to meeting some new people and having you join me on this journey of finding the exact right stocks at the exact right time. I'm going to show you how I do that, and I'm going to tell you all about the results that we've had, and I'm going to tell you how you can become a part of the Bullseye Stock Trader family. And then, of course, I'll be happy to entertain any questions as we go. So, with that in mind, let's jump right into it. Bullseye Stock Trader. Okay. So today's presentation I call Uncovering the 5 Key Traits of Massive Winning Stocks. So just by introduction, today we're going to be talking about Bullseye Stock Trader. Now, this is my stock and options trading service. It's meant for short to intermediate term trading. And by short, I don't mean day trading. I mean anywhere between, say, 2 weeks to 4 to 5, 6 months, up to 6 months or so is our range of holding periods. The average holding period I calculated recently was 56 days. So talking a couple of months, and that's stocks and options. And we'll talk about the details. But just so everyone else knows, since I'm new to this audience, I have several other publications with Eagle Financial Publications. I have an options only trading service that buys puts and calls. It's called High Velocity Options. And then I have another service that's more long-term money oriented. It's called the Intelligence Report. There's a lot of macro analysis in there, but we also have portfolios for income and for tactical plays. My other newsletter is called Successful Investing. This newsletter has been around for nearly 5 decades, and it's the kind of bread and butter service that we have at Eagle Financial, and it's a long-term trend following program that's designed for more of your your long-term, your serious money, as we say. I also have a morning briefing called the Eagle Eye Opener, which is about a 10-minute read every morning. You know exactly what you need to know to help your trading out that day. It's all about the macro, what's moving markets, major earnings outlooks, economic data, commodities, etc. So we keep a pulse on everything you need to know that day. And then my free e-letter is called the Deep Woods. Every Wednesday you'll get a free e-letter all about the markets, but it's not just about the markets. It's about all kinds of things, all cultural things, self-help things. There's a lot of hobby type references that we talked about earlier. So I encourage everyone to check that out. It's completely free. Just go to jimwoodsinvesting.com. I also have another trading service with Mark Skousen, a name you might be familiar with. He's one of the top 20 economists in the world. And he and I do a newsletter called the Fast Money Alert, where we track fast money stocks, and we use puts and calls to hedge the market. And then I have a podcast called Way of the Renaissance Man, and that is also free and open to everyone. So just check it out at jimwoodsinvesting.com. That's my all my where you'll find all the stuff. All right, let's get into today's major topic, which is uncovering the 5 key traits of massive winning stocks. Okay, now the whenever you start doing any kind of um, organizational plan or any kind of military mission or any kind of mission in life, you want to have a mission statement, okay? Because that focuses what you're going to do, that focuses your efforts, that focuses your parameters. Okay. Now, in the mission statement of the Bullseye Stock Trader, it's also called BEST, or Best Bullseye Stock Trader, is a stock and options trading service that seeks out stocks that are outpacing the market in several key areas. So the outpacing the market is the strategy here. Okay. So there are 5 key traits that I found that all these big stocks that outpace the market have in common. And that is what you want to focus on, okay? So you don't want to focus on stocks that might be undervalued, or stocks that might be ready for for a collapse, or stocks that the market's overlooking. No, you want the ones that are outpacing the market already. Okay, you want the proven winners, and you want the proven winners in several key areas. So what are those areas? Okay, well, I start by identifying the stocks that have what I call the big 5 major characteristics that tend to drive a stock higher. Okay, so when I'm giving this presentation to live audiences, to money shows, I always ask people what they think the number one thing that makes a stock move higher is. Okay, and usually the answer is, earnings, okay, which is part of the equation, of course. Another thing is people say, oh, it's a new CEO, or a merger, or a new product announcement, or something like that. And all that stuff does play into the equation. However, the number one reason a stock goes higher is because people are buying it. Okay. What does that mean? Now, that might seem self-evident that, okay, people are buying the stock, so it's going higher. But the key to identifying a truly massive winner is a metric called relative price strength. Okay. So I call it winning begetting winning, right? So when I'm looking for stocks that are outpacing the market in those 5 key areas, the first metric I look at is relative price strength, because this tells you how a stock is doing relative to the rest of the stocks in the market. So when I look for stocks that are doing extremely well, or the best of breed, so to speak, I'm looking to screen for stocks that are outpacing their peers for the past 6 to 12 months on a relative strength basis. Okay. So let's say a stock is up 10%. Okay. And the rest of the market's having a great year. The rest of the market's up, on average, like 15 to 20%. Well, that 10% winner is not doing well on a relative price strength basis. They're actually underperforming. Okay? Now, that same 10% winner in a market that's down, let's say the market's down 10% on average, then that 10% gainer is actually a strong relative price strength performer. Okay. So we want the consistent winners that are outpacing the market. And we want that to be that number, say, to be outpacing like 80% of all stocks in the market. So we want the top quintile, or preferably the top decile, the top 10%, because those are the stocks that are really, really outpacing the market. So we want it, but we'll loosen it to the top 20% or so. We want the stocks that are outpacing the rest of the market, because we want and here's the first horse reference of the day. We want only thoroughbreds. Okay, we do not want donkeys. Okay, we don't want to look for those kind of hidden gems in the market that so many Warren Buffett type players use. We're not looking for something that's cheap, that's trading at a low PE, because we don't care about that, because that's not one of the characteristics of really big winning stocks. Okay, so again, we want the thoroughbreds, not the donkeys. So relative price strength is your first metric here. Now, the second metric is earnings power. Okay, so here's where the earnings part come in, because to the victors go the earnings spoils. Okay, what we mean by this is we screen for stocks that are outpacing their peers for the past several quarters and the past several years in terms of earnings per share growth. Now, this is not earnings per share in a raw sense, like some company will maybe earn $12 billion in a quarter, but they're not growing that earnings. And then a lot of the large cap industrial type companies earn that kind of money every quarter, but they're not growing their earnings the way we're looking. They're not in the top quintile of earnings growers. Okay, so it's here again. We want the consistent winners, the proven winners that are outpacing at least 80% of the market. Okay, again, we want the top quintile, preferably the top decile of stocks that are doing well on an earnings per share growth basis. So we're looking first and foremost at the relative price strength, and then we're looking at the earnings power. That's the second thing. So we want both of those components in our favor when we're screening for stocks, because we want the best of the best. Remember, no thoroughbred, or only thoroughbreds, no donkeys. Okay? So forget about value or or any kind of stock that's that looks good on a PE basis. We don't care about that. We're looking at only the real value here is the earnings growth and the relative price strength. Okay, so here's the third component of massive winning stocks, and it's the technical pattern. Okay, the technical analysis. So the beauty is in the pattern. Okay? So once I've screened for best of breed stocks in terms of the relative price strength and the earnings power, then I need to check the technical pattern to determine if now is the right time to enter into that trade. So of course, now here we are looking at stocks that are about to break out, or stocks that are poised for a breakout, and therefore we want bullish chart patterns to recognize, such as my favorite is a cup with handle pattern. There's also several stage early to medium stage flat bases. The later stage flat bases, after a stock has run up considerably over the years, might not be the best way to buy, but also that's still a bullish buy, like a stair step type of trading, moving upwards toward the right of your chart. And then double bottom is another very bullish chart pattern if the stock has the relative price strength and the earnings per share growth. So basically, I'm using the technical analysis to determine if now is the right entry point for a stock. Okay. And conversely, whether it's not the right time to enter a stock, because some stocks that I look at have strong earnings per share growth and have strong relative price strength, but they may have moved up a little bit too far too fast, and they may be outpacing the rest of the market, but maybe they're about due for a pullback. So we want to make sure that stocks aren't overextended when we're trying to buy them. We want to buy them right at the right time. So we want the best stocks and we want to buy them at the best time. Okay, so that's where your technical analysis comes in. All right, the next element of the equation here is industry leadership. Okay, I call it when you're hot, you're hot. Right. So I used to be a big fan of bookstores. I still am, but there's not that many bookstores around anymore. Although in some areas there are still a thriving kind of subculture. But if you recall being in a bookstore, you go in and you see the bestseller new releases aisle, and it was right in the front, and it was right, and that was where the majority of the people browsing around were. Okay, and why is this? Because this is where the most interest is. Okay, this is where the new books are, the new ideas are coming out. This is where people want to buy. This is the area where people are going in to purchase. Okay, so these are the best sellers. Now they're not people aren't going in the back of the store very often and buying the bargain basement stuff. Okay, sure, that happens, but the majority of the people are going there for the best sellers. Okay, and we want to do that in markets as well. So an industry leadership perspective is, that's because the reason why you want to go to the industry leadership, the hot segments, is because that's where the smart money is going to be shopping alongside you. Okay, by smart money I mean big time hedge funds, big time money managers, big time sovereign wealth funds. Okay, there's a reason why stocks in the tech segment and stock particularly this year in the AI subsegment of tech have done so well. It's because that's where all the smart money is piling in. Okay, it's not a big secret. That's the smart money goes in and drives up the relative price strength. And if the stocks in that group have strong earnings and strong technical patterns, well, that's an area we're going to go shopping. So that is all these factors all add up to the areas where you want to be shopping with your money. So like I said, tech stocks over the past several years are a prime example of industry leadership. Now, of course, in 2022, tech stocks were, performed horribly, and energy was where the smart money was going. 2022 was a difficult year, as we all know, but because we saw that energy stocks were doing well and earnings, we gravitated toward that segment of the market for a lot of our buys, because that's where the smart money was going. That's where the money was being made last year. This year, there's been a return of tech to the tech leadership. And so therefore that's where we're shopping. So we're looking at the industry leadership as well, because markets are a kind of a living, breathing beast that moves to where it's treated best. I always like to say money always goes to where it's treated best. And that is, and in this case, that's where you'll find it. Okay. All right. So now the final kind of winning characteristic that I say is what I call news cue. Okay. So what is news cue? Well, my friend Penn Jillette has always said that the medium is the message. The medium is not the message. The message is the message. Okay. So news cue is knowing how to interpret the message of what the market's doing, okay, and what a particular stock is doing. So I call it news cue. You've heard of IQ, of course, intelligence quotient. This is the news quotient. This is your ability to take the market's pulse, okay, on a specific stock or a specific industry, and to see if there's enough positive news or enough absence of enough negative news in that stock that can drive it higher. Okay, so you want to be able to interpret the news. And by news, I'm not just talking about a news release by the company about their latest product, although that can definitely be a big thing. I'm talking about the kind of the overall market zeitgeist, knowing that people want to own AI related things, knowing the potential of, let's say, how much more productivity an AI, a generative AI type of overlay can have on not just that company, but on business in general. Having information about this, like knowing about the world, knowing about how the news in the larger sense of the societal zeitgeist influences particular stocks, and how these things like amplify people's trading mentality. That is the secret sauce per se of this service. And because NewsQ is not just an algorithmic thing, it's part science, it's part art, it's part market awareness, it's part cultural awareness, it's part world awareness. But the main thing it is a lot of applied experience. Okay, you can't just wake up in the morning and start being a young trader, so to speak, and know about all the stuff that's going on in the world. You have to have a lot of applied experience. You have to have bought many lessons from Wall Street, and you have to really kind of be in the trenches. And that's what I like to think I bring to this newsletter, is that kind of applied experience over the years. So those 5 things: the relative price strength, the earnings power, technical pattern, industry leadership, and news queue. Those are the 5 main characteristics that I see in all these winning stocks. Okay. Now, the kind of cherry on top, if you will, is what I call the options force multiplier. Okay? Now, in the military, we have a concept called a force multiplier, which in many cases is either a unit that goes and helps make other units more effective, like say a special forces unit or some kind of intelligence unit. And then we also have different jobs that are used to multiply a force's effectiveness. Jobs like a sniper, jobs like a combat swimmer here pictured. These are all jobs that increase the effectiveness of a particular unit. So when you're trading, I call it a force multiplier, because I want to be able to multiply returns, to supercharge our returns, if you will, by using options. Okay. So whenever I find a stock that I like, that has those kind of 5 winning characteristics, I like to also buy a slightly out of the money call option, anywhere from 2 to say 6 months out, and that are trading at an attractive price. Okay. So because here's the thing: if you're correct about the direction of stocks, okay, and you buy them as they're beginning a new uptrend, you get all those variables right, okay, which of course you're not always going to do. But when you're looking for these variables, and if you have the applied news queue experience and you get it right, okay, then a slightly out of the money call will also rise in price, and that is dramatically the case too. So let's say I'll show you some real world examples of the trades we've had, because let's say a stock will go up, say 15-20% in let's say 6 to 8 weeks. Well, the right out of the money call option will go up 100, 200, 300% over that same time period. So, and I'll show you again some real world examples of how we've done that. The main thing too is, if this is the easiest option strategy that you ever find, because it involves a simple buying of a call option. Okay, it's just as easy as buying a stock. There's no complicated option strategy here involved. I know there's plenty, I have plenty of friends and plenty of people I know that do very well with complex option strategies, but this is not a complex option strategy. This is buying a call and that's it. No writing calls, no put buying, no strangles, no straddles, no butterflies, no condors, nothing like that. Okay. Like I said, there's a place for that, and I encourage people that are comfortable with that to do such things, as you can do very well in that arena. But this service is easy. Okay. One buy of one call. You click on the ticker symbol I give you, you buy to open, and then when it's time to sell, you close. You sell to close. As simple as that. All right. So let's get into some of the details of how these things work. Okay. How some of these trades have worked out. So here I picked here some of our more kind of common, trading gains. Now, of course, there's not these, we don't always win. So I don't want anyone to think that this is the entirety of our service. Service has been around for, 3.5, 4 years almost now. So we've had winners, we've had losers, especially in 2022, where we had, it was a difficult environment for everyone. But here's the kind of thing that is typical. So Thor Industries here, it's RV maker. We had a nearly 46% gain in 63 days. Okay. But then if you go down on the second column there, the best call option wins. That same trade in the then September 70 calls captured a 301.81% gain in 63 days. Okay. So that same 63 days, we got a 45.75% gain in the common shares and a over 301% gain in the calls. That's the kind of upside that you can see in if you get the stock right and if you get the options right. So the second one on the list here, Tractor Supply. We talked about it at the outset, how where I live is kind of in a semi-rural area. I have horses, I have animals here on my property. I buy a lot of stuff at Tractor Supply, hay and feed and horse shavings, all kinds of stuff to keep the animals happy. And so I knew that Tractor Supply was a well-run company. And then of course I had to look at their numbers, looked at their relative price strength, looked at their earnings per share growth, all these different components. And at the right time, I knew that it was a good time to buy Tractor Supply. And that resulted in a 20% gain in just 56 days. Okay. But if you look down at the second listing here on the call options ledger, the TSCO October 130 calls, which was then, those resulted in a gain of nearly 152% over that same 56 days. So this is the power of the leverage that you get, that kind of force multiplier effect in the calls. All right, let's look at one more here on this list. The third one here, Netflix. Okay, we own that for only 22 days. And we made a gain of 19.8% because we bought it at the right time and we sold it right when it was breaking down. The same Netflix calls, okay, the same or the corresponding Netflix calls, I should say, at the time were the June 355s that we entered into, and we held that for 22 days, and we gained almost 152%. So that's the kind of power of the options. Now, the final one here I'll bring up is the fourth one on this list, Match Group. Okay, that resulted in a 38.07% gain in just 41 days. But if you look down on the second column here, the match September 75 calls were up 447.3% over those same 41 days. Okay, so a 400% gain in a call option in 41 days is outrageously good. That's as good, almost as good as it gets. That's one of the highest gains we've ever had. So, and of course, we can't do that every trade, but that's the goal of every trade, is to get those kind of big triple digit wins. because over time, when you bank these kind of triple digit force multiplier wins and you bank gains of, 38, 23, 55% in over just a few days or a few couple of months, let's say 3 months, that's the kind of trading you want. And that's the power of buying stocks with the right combination of winning characteristics and at the right time. Okay. So let's look at a few of these examples. Okay. All right. So I mentioned Thor Industries. This trade occurred in May of 2020. Okay, so right after the worst of the pandemic meltdown, and we held it till July of 2020, which is a little over 2 months. So now look at the chart here. Now, if you look at this is 2020 here. Now look at the very kind of middle of March where the market plummeted through both 50 and 200-day averages, just like because of all the selling that was happening because the world was going into lockdown mode, and that was the height of the fear element of the pandemic. But towards the end of March, the market decided to move back up higher. And why did that happen? That was because of the Fed. The Fed stepped in, opened the spigots, made money incredibly cheap, and then there was talk of stimulus right around that time. But the Fed was the main catalyst for that. So people realized that they could get cheap money and put it to work in markets. So that's what happened. That wasn't a hard news cue kind of thing to interpret. But where would it be treated best? Okay, so right around May of that year, when this stock moved back above its 250 and 200-day moving averages, I noticed that there was a kind of a news cue trend happening. Now recall that in May of that year, people were figuring out what they were going to do, what they wanted to do for that year, but they couldn't do anything that they really wanted to do in terms of their summer travel, because there was no summer travel. There was no airplanes. There were there were no airplane flights. There were no hotels. There were no amusement parks. There were no theme parks. There were no cruises. And basically everybody's vacations were completely destroyed. The entire leisure and entertainment segment was wiped out because of COVID. And no one knew how long that would take, but people still had money enough to want to do something. They wanted to visit their relatives. They wanted to see people. They wanted to do something. So what did they do? They went out and bought RVs. Okay? And they went out and bought RVs aggressively. And I saw that happening. I talked to RV manufacturers and dealers, and they were saying that the sales were just incredible. They were going crazy. I knew that would benefit Thor Industries because they're one of the biggest makers of RVs. And that's exactly what happened. Stock went up on that kind of positive news cue. The earnings came out. They were extremely strong. And the stock followed in terms. It went up 45%, in just that 2-month period. And that's when we took advantage of it. Okay? And with a well-placed call option, that's how we managed to really do well in this one. So that's a combination of kind of the news cue plus all the metrics that I mentioned earlier that were positive. All right, here's Taiwan Semiconductor. Now this was a late 2020 purchase and held it till the beginning of 21, but you can see that again the news cue situation was important, because this was a situation where we saw the demand for semiconductor chips surging because people knew they were going to be working from home. They knew that they were in lockdown mode. So what did they do? They upgraded all the devices. And they upgraded their PCs, their laptops, their tablets, their phones. Everything was upgraded. All of their PlayStation type devices, all their gaming devices, everything was upgraded. Okay, everyone needed to upgrade all their stuff. So that's what they did. That resulted in a big move higher in the backbone kind of semiconductor manufacturing company, Taiwan Semi. And as you can see, in that say roughly 3-month period, the shares moved up nearly 56%. And we also saw a move of nearly 244% in the November calls. So that is the kind of pinpoint accuracy that we've been able to uh, consistently have based on all of the different metrics that I mentioned before. All right, here's another one, in mode. This was a 2021 purchase, June to September of 21. Medical device maker, up 67%, okay, in over that 3-month period, a little over 3-month period, and the calls up 250%. Now, you look at the technicals here, you could see, look down to June of 2021, you'd see that there was what I call a cup with handle pattern built. The cup started around late April, and it moved down below the 50-day moving average and moved back above its previous high right at that kind of handle gap in June, and that's when we entered into the stock. Okay. Then the handle kind of kept on going higher, built another base, jumped up again in July, jumped up again in late August, jumped up again in early September, and that's when we rode it all the way to that towards that September high there on the right hand side before we exited. That's when the momentum kind of started to give back. That's when we exited the stock. So this is a perfect example of a stock with strong earnings, strong relative price strength, and a great technical pattern, and us riding it all the way till the momentum started to pull back a little bit. And now some of these stocks that we've had in the past, we may have given up a little bit of upside by leaving the stock, once we saw that the momentum has ceased, but we've done it after big gains. So you always want to make sure you lock in strong gains and not let those gains come back on you. And if you get a sense that after you've had a 50, 40, 30, 40, 50% gain in a stock in just a few months, you don't want to let that go back down. Okay. So you at least want to sell half of your position or half of the calls that you might own on a position. Preferably you sell everything and you bank that huge gain, because that over time, those big wins and even medium, small to medium wins can add up very big. Okay. But you don't want to get any really big losses, because that will chew away at your overall performance over time. All right, here's another one, Costco. Yeah, we all know what Costco is. I actually don't like shopping at Costco, although the deals are incredible. I find it somewhat chaotic there, but the reason it's chaotic is because there's a lot of people shopping there, and they make tremendous revenue, and especially during this time period in September of 21 to January of 22. So if you look at the chart here, we entered into this at the very end of October or end of September, okay, right when the stock was kind of pushing back above its 50-day moving average at the time. And then, as you can see, in October, the stock started a huge run. Okay, made an excellent run higher, all the way up to the beginning of January, and that's when we exited the position. So it made a 21.68% move higher from 930 to 16. And of course, in the beginning of January of 2022 is when the bear market started. But not before in Costco, not before we gained almost a 299% win in the January calls at the time. So here again, you see the big move higher from a technical, like a cup with handle kind of pattern, and then the move higher, and then we got out as the shares began to break down a bit. Okay, so here's another one, Meta. This is a more recent trade. This was in March. Meta had a huge run for, in March, April, May, and still doing very well. But you can see here that in mid-March, the shares broke out of like a cup with handle pattern that started in early February, went down. The cup was forming until right around the mid level of March, right around March 16th, which is when that breakout happened, and that's when we entered into the shares. Okay. Shares went up, pulled back down a little bit in late April, and that's when we got out. Okay. So we made almost 19.77%. Now, if we would have held the shares a little bit longer, we would have benefited from that big gap up in late April. Okay, but we didn't. Okay, this is something that I would have liked to have been patient enough to have, but we didn't. We exited the shares, but not before we made 112% in the July calls of that time. So that is the kind of gain that we want. Now this one, like I said, I wish I had continued to hang on to this one for a little longer, because as you can see, it went up to almost 300 a share. But that's okay. That's the kind of thing that you never want to regret a 20% win in 6 weeks in a common stock. Okay? You got it right there. And you might have left something on the table, but hey, I'll take that. As they say, a man never went broke taking profits. In this case, especially 112% profit in just 6 weeks. All right, let's look at a couple more here. Royal Caribbean Cruises. This was in May of this year. Cruise purchases earnings were going were aggressively higher in that time period, as was this Royal Caribbean stock. People kind of had that revenge buying in when it comes to vacations, finally beginning to do that again. And as we see, from May to early June, which is only very short time here, we were able to bank a huge gain, 14% gain in that time, which is real big, and almost a 92% gain in the calls over that same period. Okay? So those are some of the kind of the prototypical moves that we've had over the last, say, I think it's been almost 4 years now since we've had this service. But this is a kind of the overall cheat sheet, what I call, of the Bell's Eye stock trader. So once again, I screen for high relative price strength. Okay, I want that top quintile or top decile preferably. I screen for strong earnings per share growth or earnings power, because also I want the strong earners. So I want the strong price performers and the strong earners. Okay, so looking for the best of breed out there. Remember, the thoroughbreds, not the donkeys. And we buy on bullish breakout patterns like the cup with handle or like the flat base, like you just saw in some of those previous examples. We buy on bullish news queue. Okay, that's another important thing. The news, the general news queue, as I've defined earlier, we want that to all be bullish in our favor. And then we buy slightly out of the money call options as our force multiplier. And we hold until the momentum ceases, or until we've gained enough profit in a position that we think it's time to exit. Now on the downside, we set stop losses on every position. So I only want to, it's usually about 12%. It's not necessarily 12% in every position. Sometimes there's technical areas where I want to make sure I protect. If there's some kind of major support down in the 10% area, I want it to make sure that I get out before it breaks below that, because sometimes that can cause a big more aggressive sell-off through the 12% area. But generally speaking, 12% is where I think this market tends to be the most forgiving. You can buy a stock and it can be down 8-9%, but you still want to own it. But if it's down 12%, then that means I didn't get it right. That means I didn't buy it at the right time. And if the position goes against us, then we exit. And we don't play around with like hoping it'll come back or just hanging on to it. That's not a good prescription for trading success. Be disciplined with your stops. Okay. Now the average days held here, again, 56.3. All right. That means you're only having the stock, only owning something for a couple of months. So that kind of automatically reduces your exposure, reduces your kind of your overall risk, as it were, because you're not in a stock a long time. You're not going to ride it through, its ups and downs. You're going to try to buy it at the right time. You're going to try to sell it at the right time. So now this last couple of numbers are what I'm very proud of here. So through the first 3.5 years of the service, which is the last time I calculated exactly, our average annual return was 122.05%. Okay, so what does that mean in numerical terms? So if $100,000 start would be more than double. 100, it would be 222,000 in a year. And that same 100,000 at the beginning of the service, if you followed all the buys and all the sells, winners and losers, that would have grown into a $1.6 million portfolio in 3.5 years. So that is a kind of game-changing um, gains that you can make with buying the right stocks and with those 5 winning characteristics, and using that force multiplier effect on your money is the other major way to do it. Okay, so let's just go through a couple more here. This is me here with a slightly different hairstyle, and we mentioned earlier I was ranked #1 by tip ranks. I'm consistently in the top 10 or 12 there, and this is ranking all of my newsletters all around, all over the performance, not just the bullseye. So as you can see, the success rate is pretty good, and like I said, it was ranked at the top for multiple times over the past few years. Okay, now here's something that I want you to understand about not just trading, but about anything you do in the world. Okay, you must have fun doing it. Okay, fun is an underrated element of life. Okay, one of the reasons I have a lot of hobbies is because I want to have as much fun as possible with the time I have in life. Okay, and one of the ways to do that is to enjoy everything you do. And if you're fortunate enough to enjoy this type of adventure, this type of money making with your trading capital, and you're looking to make your profit, your money become more money. I think that's the most fun thing you could ever do, because it's not really work if you're actually enjoying it. Okay, it's not that it's easy. It's not. I mean, finding these winners and things like that is not an easy task. You have to sort through a lot of details, sort through a lot of information, and really apply as much reason as you can. But when you get those kind of returns for yourself and for subscribers, that is really fun. So the great Richard Branson put it succinctly here. He said, fun is one of the most important and underrated ingredients in any successful adventure. If you're not having fun, it's probably time to call it quits and try something else. I love that. Okay. So have fun with this. If you're too nervous about your money, if you're too nervous about the results, if you're not having fun, if you're you get an ulcer every time you put your money to work, then you shouldn't do it. Okay. But if you want to actually have fun and do things that are going to make you money and at the same time enjoy it, then I will invite you to join our Bullseye Stock Trader, because today we have a very special offer. Okay. Now, regularly, this newsletter is $199, or I'm sorry, $1,995 per year. Okay. This is one of my premier services. Okay. But for today's webinar and and for the privilege of actually being able to present to you guys today, we're offering a deal of $399 for the first 6 months. Okay, and that'll be your price from then on. So $399 is the lowest that we offer on this newsletter, and it's more of a kind of a way to make sure that you can get involved, especially to a new audience, because we want the ability to, we want the opportunity, say, to allow you to make some money on these trades, and to see that this is a very effective way of doing it. And it's one of the easiest things. All you have to do is follow the trade alerts that I have. Usually it's once a week. Sometimes it's twice a week if there's a sell, or if there's a profit taking opportunity, or if there's some kind of major news that I want to relay to you on a particular stock. But generally speaking, it's email a week with all your trading instructions and updates on all the positions, and that comes out every Thursday. So that's all you have to do. Okay, follow the simple directions. It's easiest options trading service you ever have, and you buy the individual stock. And then when it's time to get out, I'll let you know when it's time to get out. And it's as really as simple as all that. So thank you very much, everyone, for participating in this. And I look forward to seeing many of you join me on this adventure. Join me in the money making of having fun. So with that, if there are questions, I would be more than happy to entertain as many as I have time for.
Right. Well, we had one that said, typically how much money is committed to the trades and how many contracts? That was
Okay.
back around 11:30 mark.
Okay. All right. Sure. Well, of course, that depends upon you. It depends on the size of your portfolio. It depends on what kind of money you can commit to a particular trade. I don't tell people this. I don't tell people particular sizes of trades. I don't say buy this with 10,000. I don't manage a kind of a model portfolio like that. Basically, what I'll give you is I'll give you the trade and I'll give you the calls to buy. Now, the money that you put into that trade will be up to you. But let's just say hypothetically you put $5,000 into a particular stock. I would say that the contracts that I would say between $500 to $1,000 in the contract. Okay, so would that make you get you one contract, two contracts, 10 contracts? Depends on the price of the contract, of course. But generally speaking, that would be like my general kind of rule for trading. But again, that's all up to you as far as how you want to divide your capital. Now, some people I know that love the options element of this service more than the actual stock purchase part of it will just use the options. And that's fine with me because I'm identifying the stock to buy at the right time. So if you're just say you're only interested in kind of those big triple digit wins and you want to take your chances on that alone, that's perfectly fine. I know, like I said, I know there's a cadre of people that I know that I hear from that only buy the calls when I make a recommendation. They don't buy the actual underlying. But then keep in mind that the swings will be much more. So yeah, you might get 100, 200, 300% gain, but you also might lose 50%, 60% because that's the nature of the options, the movement of options. So when a stock pulls back 12% in the common, it might be down 50, 60% in the options. So keep that in mind.
Cool. And then we also had from Anne, she says the tough part is holding for that long when stock moves up and down. Fear of loss.
Of course,
And that
yes.
was around the 11:30 mark as well.
Yeah, that's well, that's definitely true. I mean, now, okay, so it depends. It's funny when I talk to different audiences about this newsletter and what I do. Some audiences, the more kind of day trading individual, like trading off audiences that like to be in and out of positions, in either one day or a week or something like that. They say, hey, why are you going to hold the stock for that long? That's a long time, a long period to hold it. But then other times I talk to a more general kind of audience that is more, longer term investors. They see that we have a typical trading period of 56 days, and they say, how could you own stocks for that short of a time? So it really depends on like your kind of mindset and your overall like way you look at the markets. I think that the 50-day-ish, 50, 56 days, like anywhere from 2 to 4, 5, 6 months is actually a sweet spot for a lot of these stocks because you're not exposing your money for a long period, but you're also letting the market you're allowing the market to make its longer term move. So I think it's like kind of like I said, I think it's a sweet spot of owning a stock for just the right amount of time, and especially if you get it right.
Yeah.
But the day trading, but see, I understand if you're more of a quick, fast trader, then it does seem a little bit longer than normal. But I think the results bear out your, out the risk there, as it were.
Yeah. So I'm wondering, how do we have a link that you want people to go to
Uh,
that where they can get that
you,
special
I'm pretty sure.
presentation offer?
Yeah, I was under the impression that you had a separate link there for me for the offer.
Okay, just a second.
I'm pretty sure we sent it to you.
You're probably right. It's been quite the roller coaster in the last couple of days. So it's
Yeah,
very, very, very probable that I have just missed it. So let me just look. Let me just take a quick look. Uh, there we go. I think I found it.
okay,
All right,
great.
I got it. I got
Okay,
it. I
yeah, put
get
that
it.
one in the chat. We would definitely need that one in chat.
All right. Yeah. Well, I didn't want you to get away without me putting it up there. So
I
I'm
can
gonna,
see.
it's a pretty long one, but it's okay.
Yeah, it goes straight to our landing page there. There you go. And
All right. There we
okay,
go.
that'll take you straight to the page, and it's very easy to sign up. It's very easy to become a member. And as soon as you get your sign up, you'll get access to the website, which has list of all the current trades. And then the next regularly scheduled update, the next regularly scheduled update will actually be in a couple of hours. So you're going to see, I mean, we just announced a new buy yesterday. So there won't be a brand new buy today, but the buy that we issued yesterday is still a valid buy. It's not like one day doesn't make the big difference here, especially in this stock. It's an AI related stock that I think everybody should own for as long as we're going to own it. But the all of the characteristics that I mentioned, the relative price strength, the earnings, the industry, the news queue, all extremely bullish, and there's plenty of liquidity in the options chain. So if you want the most recent recommendation, which was just sent out like I think about 20 hours ago, you'll be able to get on board that newest trade if you sign up today.
Awesome. Thank you so much,
Oh,
guys. I put the link in the chat. And I also noticed on that page, on the landing page, you can even call in and make your
yes.
order. You got to make sure you use that priority code I put in there. And I mean, and did you said they pay $3.99 for 6 months and they can renew at the same price?
Yeah, I believe the renewal is, I believe that's your price.
And
So
if you let it lapse, then you're going to go to full retail. So you might want to get on that so
yeah,
that you
get
can
on that
take the
now.
best
That's our
advantage.
best offer, right, that we've had. And I was happy we have that offer because in the past we've sold 6 months for much more than that, for double.
Okay.
So
All right.
yeah, I highly recommend if you're interested, this is the best time to do it. And the market, to me, the market is in a position right now where we're going to have a good fourth quarter, I think. So
Okay.
now there's going to be even more big winners, in my opinion. Of course,
All
I
right.
don't know that for sure, but that's definitely the goal.
There you go. All right. Well, again, thank you for coming on with us. I hope
You're
you'll
welcome.
go out and find your favorite horse and give it a hug for me.
I shall. I will do that.
And look
I'll give a
forward to
big
having you
kiss
back
too.
again.
All right. Thank you so much. I appreciate it.
Moomoo is our sponsor for September. With Moomoo, you get free access to real-time LV2 market data of US stocks. And for a limited time, join 19 million Moomoo users and get up to 16 free stocks, including Tesla or Google, when you register for a new account with this link and you fund it with at least $100. So the way it works out is for the month of September, deposit $100, you get 5 free stocks. If you deposit $1,000, you get the 5 free stocks plus 10 free stocks. And if you want to have a $5,000 account, you get the first 2 tiers plus 1 free share of Tesla or Google.